Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 1% to 4128. Ethereum down 0.08% to 3047. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video. As a community, we focus on maintaining a positive excellence life trend. That means that we understand that money is the result of doing the right thing. It's the result of positive excellence. And all of these little boxes here are designed to actually fight self-sabotage and self-doubt. Self-sabotage, self-doubt are the two worst enemies any investor or trader will ever face, and we know every investor becomes a trader anytime they buy or sell. As crypto technical analysts, we scientifically track investor attention. Investor attention is measured through price. Price is reality. A lot of projects have a lot of promises, and they're fantastic promises, but if you see the price going down and down and down, you know that the reality is something different than the promise. That's why crypto technical analysts have a specific way of marking up their charts. They look to outside trends to collect probabilities. They look back inside the crypto market as opportunities do reset daily, just like in life. They have a real wealth focus, and this is absolutely critical. A real wealth focus means that people are not caught in self-sabotage and self-doubt. When people feel or experience a sense of jealousy, a sense of competition, that's all about self-sabotage. That stops people from leading a meaningful life. After we've done all this foundation work, we then get into the trigger, when to buy and when to sell. When people are new to the crypto market, they do everything in reverse to the process I just showed you. I develop KS zone analysis to explain the different stages that all investors and traders progress through. That's literally all traders and investors. Zone 1 is the entitlement zone. That's where people think that if they put their money into the market, they'll get the returns because they've participated in the market. Unfortunately, if you don't know exactly what you're doing, the market takes your money. And that leads people into zone 2, the blame zone, where conflict and jealousy reign supreme. It takes a long time to realize that these two bases, the panic zone and the blame zone, are based on certainty. Certainty creates terror. The only way to overcome certainty is to deal with probability. There's no certainty inside any financial market, especially crypto. For example, if we look at Case Bitcoin, which is a really good website, we can see the return on investment for Bitcoin over years and years and years has exceeded that of gold and that of the stock market, the proxy being the S&P 500. But you can see we're down 31% this year. There is no certainty. Just because we had fantastic returns doesn't mean that the return will happen straight away. Crypto is a really tiny market, and there's much more institutional money on the way, especially when the XRP versus SEC lawsuit gets resolved. What will happen when that actually gets resolved and it looks like the SEC is going to lose? If that is the case, it will pave the way for widespread institutional adoption. Well done to all the people who commented on what that actually meant for the crypto market. You did really, really well. So many great comments. When we look at the crypto market globally, it's a tiny, tiny market compared to the stock market and the bond market globally. It's also the next evolution of the internet to the internet of money or the internet of value. It's got literally decades and decades of growth potential ahead of it. You're so early, you're right at the start, and that's when the returns are really, really made. But you can see how an addiction to certainty could lead a lot of people to think that the price only goes up. When you see these massive percentages, you would say, oh, it's just a sure thing. I put the money in, it goes up. Financial markets have a lot of rules, and the number one rule is you must learn all about them. Also, when we get away from the conflict and the blame zone and the panic zone, we enter the make money rule zone. That's all about actually seeking probability, not certainty, having rules, not terror. If you've ever seen this concept about people going from hope to optimism to thrill to euphoria as the price goes up, and then they go into anxiety, denial, panic, capitulation when the price goes down. This is retail thinking. 95% of people inside markets, all financial markets, have this retail perspective, and it's very, very damaging. Smart money doesn't have these emotional swings. They're level and constant, and they don't get into blame. Why is that? It's not because they don't get upset. Of course, people get upset. Human beings are human beings. But the concept is they don't point outwards, they point inwards. That's why self-development and self-growth, it goes hand in hand with making money. That's why we relegate money to a low position. We push it down. If we're solid, money grows to our level of self-development. There's been many examples over time of very, very prominent people who have made a lot of money, but they've unfortunately ended up in a very bad situation. They either give the money back or other bad things happen. Jesse Livermore is a case in point. That's why just getting to zone 3 is not good enough. We need to get into zone 4. Zone 4 creates the meaning in life. All of these boxes are zone 4 boxes. When people have inner peace and outer peace, the very destructive forces of self-sabotage and self-doubt don't impact them. They have a system for doing what they do. They follow rules, and they know the rules work because they're unwritten and absolutely proven over time. Positive excellence means that we have persistence and commitment. We stick to our guns. Our word means something. We have integrity and decency. We don't harm other people. We have kindness. We look upon people not from a competitive landscape, but from a cooperation landscape. We seek to understand. All of these green boxes actually get us out of the blame zone. Self-doubt and self-sabotage reign supreme in Zone 2. In Zone 4, we eliminate self-doubt and self-sabotage. That's why I always say life resets daily. Every day you have the opportunity to live your best life. Many people think that mindset plays absolutely no part in the crypto market. I have to disagree. Your mindset is one of the most important things you can cultivate. And if you have a real wealth mindset, a positive excellence, life trend mindset, you're going to do really well and lead a really meaningful life. And hey, that's what it's realistically all about. We've seen Bitcoin and the entire crypto market under a lot of stress recently. That's because of Rule 225. Bitcoin cannot escape the stock market's gravity. We've seen the NASDAQ 100 come up and then come down, and as it's come down, it's dragged the entire crypto market with it. But the markets are actually really, really strong. A lot of news sources say that the markets are headed for impending doom. It's not really the case. The markets are in mid-stage expansion. This is a really great time. And in late-stage expansion, things start to get blow-off tops. But the concept is we're actually doing really, really well across the globe. I raise this point because of Rule 45. And rules dictate our profitability, so we must have rules. Rule 45, no alt can escape Bitcoin's gravity. We can see that the crypto market has been under resistance. It's been under a level of resistance for some time, but it's actually just overcome that level of resistance. We've got very light trading in the market at the moment, and we can find that out by looking at liquidations, but liquidations are about short and long positions. So how are they going? The short positions are starting to increase. This means that the shorts say, I believe the market is coming down. What do the longs say? The longs say, nah, shorts, you're wrong. We believe the market is going up and up and up. Now, what does the actual reality say? Price is going sideways. We got a fight between the longs and the shorts at the moment. So that means we need to look more deeply. When we see the crypto fear and greed index, we can see the fear has been at really high levels, but that's starting to turn around, and we can see what's happening with Bitcoin's price. It's starting to base out. It's got a lot of support through this area from 40,000 down to around the $35,000 mark. Just bear this in mind. Sometimes we can get these really long tail rejections like this. It is possible that we could get a long tail rejection as the markets open up. The institutions love to play with retail, and they love to liquidate, go and hunt their stops. That's why the best way to protect yourself is to just buy at spot. That means you own the crypto that you have. You can just sit infinitely on it, and you can wait for it to improve. And why would we say something like that? Because we know where the crypto market is going. We know it's growing. And one thing, as risk management, please confine yourself to around the top 50 cryptos. You'll find that the top 50 give you more than adequate returns. In fact, they can give you some fantastic returns. If you're after the 100 to 1 shot, it's just like gambling. It can be a thrill, but it puts you in zone 1 and zone 2. Professionals know that we just require a small return through a variety of different periods, say a week, and that actually will grow something small into something very large. This I call the 10% per week concept. It's an idea. It's not something that you need to go out and say, I can only get 10%. Often you'll get much more than that. Sometimes you'll get much less than that. And in those times, if you're holding at spot, you can just wait things out. It's fine. We cannot push the market to our dictates. We cannot dictate what the market does. And many people try to do that, and they break the market's rules, so the market will penalize them. That's why it's so important to know the rules of the market, and that's what I share in the CryptoTradingKS Masterclass. To make these kind of returns, you need the knowledge, you need the rules, you must have patience, have a real wealth focus, which is not focusing on money, but doing the right things. And of course, we must BORSOG, we must buy on red. One thing to always bear in mind is Rule 4, price moves in waves. When you understand this rule, you're going to do infinitely better. You won't be shaken out of positions because they turn against you. It's just price moving in a wave. A lot of times people don't understand Rule 4 and it crushes their portfolio. As it's holiday trading, we would expect to see light liquidation volumes, and that's exactly what we do see. Under 58 million and under 20,000 positions liquidated. Over the past 24 hours, about 66% of liquidations have been long liquidations, but you can see these liquidations are very small in comparison to these larger ones. For example, this is a large one. And we can always tell in the weekend and across public holidays, volumes get really light. That means that things can move around a lot. So we can contextualize this particular price action. What's happening? The longs are entering the market, so are the shorts. The longs are getting liquidated, and we can see that right now in the current price action. What actually can happen with Bitcoin? It can whipsaw around a lot on light volume, and this is something a lot of people don't realize. Our major guidance is the stock market because we cannot escape the stock market's gravity. At the moment, the NASDAQ 100 has been dictating Bitcoin's path. But when things start to repair, when the markets get healthier, Bitcoin will decorrelate from the stock market, and it's always the case, but the gravity is still there. Gravity and directional correlation are all different things. But to note, we know that the indices are at a pretty good stage. They've retraced and probably done so in a healthy way. They may have a little bit more downside to them, so we may come into this B area, but we also know that we've got a lot of support in Bitcoin at the 39,084 mark, and we've got a lot of support down here at the 36,753 mark. This is good because price will hit these levels and bounce back up. But we also know there's no certainty in the market, and we're starting to see that we're getting up to a cross in this level of resistance. It's really, really good. Bitcoin is going really well. And a lot of people say, oh, the crypto market is going to implode. And those people have been saying that for a long time, every chance they get. Why is that? Why do people say this? Because it's in their vested interest to do so. A lot of people are only in, for example, precious metals. The precious metals people, in the main, don't like crypto because they feel it's taking money away from the precious metals. As a former gold trader, I absolutely understand this. It makes sense. But so many people look at the precious metals now and they just say, well, it doesn't really have the volatility. I want a bit more volatility, because professionals make volatility their best friend, and you can actually do really well by these choppy movements, as our community members do. Another thing we see when we look at futures open interest, we're seeing an upscaling here. We're over resistance. We may get a very big pop. Maybe what actually happens is so many shorts pile into the market because they feel that what will happen, the US markets will go down and drag Bitcoin down with it. But institutions actually pull the rug on certainty all the time, and you'll find this the longer that you trade and invest. Please let me know what you think. Do you think we're coming down to B? Do you think that when the markets open, the institutions will short wick down and try to push price up by liquidating the shorts? Or do you think we're in a downward motion? Or do you think we're in an upward motion? Or do you think we're going sideways? It's really important to discuss these different aspects. That's because we always make in advance probabilistic choices. We're never caught off guard. If the price goes down, we're prepared for it. If it goes up, we're prepared. If it goes sideways, we're prepared. We are always prepared as professionals. Zone 3 and Zone 4 professionals. Zone 1 and Zone 2 get into that emotional roller coaster simply because of two things. The first thing is that they have diamond hands but don't know when to sell. And the second thing is they focus on certainty, which leads to terror. Certainty is the worst thing. It will keep you up at night and create enormous amounts of stress. You want to get out of these stress zones into the peaceful zones, Zone 3 and Zone 4, as fast as you can. So how do you get there? One way to understand: if you're thinking that you can perfectly time something, you cannot. If you're impatient, you need to develop patience. If you have that one-way decision making, it can only go up, it can only go sideways, or it can only go down. You need three-way decision making. A lot of people in Zone 1 and Zone 2 buy the green, sell the red. That means that the percentage works against them. That's a really dangerous thing to do. Another thing people do, they have an all-in or all-out mentality. This is also really, really dangerous because the crypto market is so volatile. It can just whipsaw all around the place. A lot of people inside Zone 1 and Zone 2 have an addiction to news, indicators, and certainty. All of these addictions are bad because news is just existing for the advertisers. Indicators can frequently fight and argue amongst each other. They get together and they don't agree on so many things. And the problem is you're trying to make a decision on various indicators that don't agree with each other. It can cause massive confusion. Certainty. There is no certainty inside financial markets. You will never get a participation award by just turning up and throwing your money into an altcoin, potentially in the top 1,000, hoping that it will make you a millionaire and you will never have to work again. This is crazy stuff. You should never think about it like that. If you're gambling, you will lose. And if you win, you'll lose as well. There's so many stories of lottery winners and the lottery winner's curse. They say people who win a lot of money by just putting in a lottery ticket or just getting lucky, everybody wants a share of it. You win, but everybody wants their cut. That's not the same. When you go to work, when you earn your money, people don't come up to you and say, I want my cut. They don't do that because they know they work for their living as well. And they don't want anyone coming up to them and saying, I want my cut of your work. It doesn't kind of work that way. I don't talk about this much, but this is really important to talk about. When people have a win-lose philosophy, they think that they must win and somebody else loses if they win. This is simply not the case. Everybody's at a different level of knowledge. Everybody wins eventually if they stick in the market for long enough. If they start to learn, they'll do really, really well. But it's all about having rules. When you have rules, you don't ride the emotional roller coaster because you just say, this rule is applying now. I need to be mindful. And having that positive excellence life trend means that you don't look outside yourself to blame others. You look inside yourself and you don't blame yourself. You just forgive yourself and you say, how can I learn? How can I do better? What did I miss? All of learning is about actually improving. All of blaming is staying stuck. Blame, conflict, jealousy, these things don't serve you at all. They're horrible, horrible things to have in your life. What that means practically, if price goes for you, a lot of people get really excited and they buy the green, and then price goes against them and they say, oops, I got it wrong, and they sell the red. As a professional, we do exactly the opposite. We buy the red and we sell the green. When you actually buy the red, you're lowering your overall cost base all the time. When you sell the green, you're increasing your relative profit. If you buy the green, say you bought the green up here at 43,424, just around this point, you would have to wait until here to make a small margin, but you could have made that margin there from here to just here. This is really important to understand. You can make a lot of money in crypto, but you need the right outlook. And you need to know and have the knowledge of when to buy and when to sell. And that's not a simple thing to actually teach someone. It requires very structured and disciplined thinking. That's why I share the scientific process within the masterclass. Let's have a look at the market's focus. We can see audio starting to break out. It's up 20.54% over the past 7 days. Comp is nearly up 10%. Decred, DCR, just a little over 4%, and SHIB coming up to the 4% mark. We can see because Bitcoin has come down, we've seen a suppression in price, but that is really, really normal stuff. This is not anything abnormal. You cannot make the market only go up. And some of these cryptos have been very hard hit as well. Cell is down about 25%, ANC just a little over 24%, MENA over 22%, CVX over 21%, RNDR nearly 20%, and Luna has come down around 15%, Arweave about 14%. What we can see is the markets are always going up and down. Sometimes a great winner in 1 week will become the biggest loser in the next week. So what does it mean about where Bitcoin's going? We can see Bitcoin maintaining this support line. Does it mean it can't come down and do this long tail? We expect that it can. It's done it in the past and it loves to do it again. But why do we get these long tail wicks? This institutional action pushes price down to grab everybody's stops. It's a stop hunt mechanism. And a lot of people get liquidated, and then that forces the price back up. You notice these long tails are typically accompanied by reversed action like this. If we get a long tail rejection down here, and we could do so, we could hit the 37,364 mark quite easily and still maintain this very, very nice uptrend. If we do that, that is something that you need to be aware of. It doesn't mean the price structure of the market has broken. A lot of people, when they get into technical analysis, they take it far too literally. They say, if this line breaks, I must sell. And then this happens, this price action. Actually, what we do, always lower your average buy price. You want to buy on the red, and the redder the better. We love the red inside our community. We're always BORSOGing. What is BORSOG? It's buy on red, sell on green. We always seek to enter a trade, especially after it's sold off sharply. This is what professionals do. Retail, which is zone 1 and zone 2, seek to buy when everything is going green, and when price turns against them, of course they panic because they say, I got it wrong. I was certain it was going up. People told me it was going up, and I believed them. So then they get really, really angry. What you need to do is get independent of everyone. You need to have the knowledge. So we can see Binance Coin performing relatively better than Bitcoin. Now, why do I say that? Why is Ethereum a better performer? Aren't they both basically doing the same thing? You can look into these particular humps. You can see this hump here on Bitcoin. And where is the associated hump on Ethereum? I'll just do something that will show you where that is. Okay, so if we look here, we can see this hump here is this hump here. Now what happened? What about this second hump here? You can see that Bitcoin was outperforming Ethereum at that stage because Bitcoin's price action was stronger. The hump was higher. Ethereum, the hump is lower. And a lot of people would say, oh, okay, Bitcoin is about to take off. But look at what happened when this particular level of resistance was overcome. It started to rally up. Now notice this peak here as opposed to the peak here, which is a little bit before that peak. And this peak here on Ethereum compared to Bitcoin. This is much, in Ethereum, it's much higher up than Bitcoin. This is why we can use Bitcoin's gravity, this blue line, to track things. Let me just turn this crosshair off. It makes everything a bit bananas. But the concept is, when you look at Bitcoin's gravity, that's why it takes a lot of knowledge to actually understand how this works. And it takes a lot of training too. When we look at Binance Coin, we can see Binance Coin performing quite well. Similar humps to Ethereum. Higher one here like this, lower one here like this, higher here like this. It's really interesting to get your pattern recognition really, really attuned. You want to be able to look across the crypto market. Many people say, Ken, I don't want to look across the crypto market. I just want to go to crypto token 1567 and see how it's going. I can tell you anything outside the top 200 will likely get smashed at some stage. The volatility is so great in those particular tokens, and there's about 19,000 cryptos out there. People are looking for a quick buck, to get rich quick. You'd never get rich quick. If you do, you get the lottery winner's curse. You end up with a lot of people with their hand open saying, well, you didn't earn it. You just got lucky. So I want a piece of that luck. That's why we must earn things. Let's have a look at XRPs. Not that there's anything wrong with sharing with people. Sharing with people is fantastic. But if you work for it, you get to keep it. And that's the concept. We can see XRP was doing really well. It lost a particular support line. It came down, found its lower support line, then rallied up. This is really interesting. And XRP does have some really good news. If XRP wins its court case against the SEC, I think the entire crypto market is going to party. Like it's really going to party, because that means the institutional doors will be flung wide open. That's what the SEC wants to stop. That's why it's putting in so many delay tactics. With ADA, Cardano, we can see ADA is starting to base itself out. It's starting to overcome resistance. I was telling people down here around this 80-cent mark, it's time for Cardano. If you want to scale in, it's probably a good idea to do so. But people have to do their own thing, do your own research. And what happened, I believed it would come up to around this level or possibly this level at the top. It went a little bit further, which was fantastic, and crypto tends to overshoot. But we're not aiming for tops and bottoms. We're just simply wanting to participate in the sweet spot of the trade. And you know that if you turn enough of a percentage, you're going to do really, really well. And you just have to do that consistently, but it doesn't have to be every week. When we look at this particular price action, this basing action looks really nice. Ethereum's action looks really good. I wouldn't touch Binance Coin just yet. It's got a different dynamic. It's actually pointing down, whereas these ones are forming a nice turnaround. There's so many different things that you need to look at in the crypto market, and the only way you get familiar is to mark up your charts. And it's a very active thing. The crypto space, you need to be active in it, and it's really, really worthwhile. Solana, we can see it basing out at the moment. What about Luna? Luna is also basing, but it looks a little bit weak here. Luna is a little bit crazy. It can do really big spikes up and really big spikes down. If you're in Luna, be prepared for it to drop to 57. If you can withstand that and you're BORSOGing in, that could be fantastic. But we always think the other way as well. What if it goes up? And that's what it is to be a professional trader. You've got to literally think in 3 dimensions at once. You say, what if it goes down? Prepare for your risk management on that. What if it goes flat, sideways? That would be an accumulation trade. What if it goes up? Then you would be seeking to do your SOG, you're selling on green. Remember, professionals sell on green. Retail buys on green. They couldn't be more different. Why do they do that? Because professionals want to make the percentage work for them. When we look at AVAX, AVAX is very close to its support line. It's just quite a lot like Bitcoin actually. This is really good, but you notice the strength here. AVAX came down hard, Bitcoin came down hard, and then we don't see lower wicks here like we see on Bitcoin and some of the other ones. This is showing us a lot of power inside AVAX. This is really, really good. And AVAX is also starting to base out. This could be really interesting. Just like I was talking about ADA, it could be interesting. But please know, there are no guarantees. There is no certainty in the crypto market. You have to be prepared for price to move against you. And it can always move against you. And if you're doing the professional trading, you're already counted for that. Turning to our community favorites, we can see Gala is basing as well, just like the vast majority are. We can see RSR has a little bit of kick up here. This is good. There's so much support for RSR just here. That's a better level of support than what we're seeing in Gala. Gala support is more way back here. We could see a little bit more weakness in Gala, but just keep your eyes on things. If Bitcoin starts to rally, we know what will happen. The entire crypto market will rally with it. Let's have a look at Icon. Icon is basing, showing just a little bit of weakness, but overall not a bad pattern. Veracity has a better pattern than Icon, has a similar pattern in terms of basing to Gala, but you can see much more support here. That means buyers would be stepping in at these support levels to actually stop the sellers from controlling the price action. Zilliqa, we can see ZIL actually consolidating around this area. We can always see these kind of things in crypto, a big shoot up, a backwards consolidation. Typically they have 1 or 2 more runs in them when you see this kind of price action. But be aware, there is no certainty, only probabilities. And you must be prepared for up, down, and sideways action. When we look at Rune, Rune is coming down. I really like Rune as a project. I'm not sure I would get into Rune at the moment. It's looking a little bit too weak for me, but that doesn't mean it can't go up. Absolutely. Anything can go up in crypto. You can get huge spikes up and then huge spikes down. It's just the nature of crypto. When we look at IOTA, IOTA is just basically forming a consolidation pattern here. but it's moving in alignment with Bitcoin. It doesn't have much support, just recent support below it at the moment. When we look at DOT made a strong play and now it's retraced, but there's a lot of support through here. This is having underneath support is really, really important, but I can't urge you enough. You must have the knowledge of what you're doing. And a lot of people get their knowledge from the stock market. Stock market knowledge is not applicable to crypto. What it will do, the stock market is basically linear. It's very, very slow moving and it's slow traded. It's only open a fraction of the time that crypto is open. Actually, crypto is open 5 times more than the stock market is open. Also, the price action inside the crypto market is exponential by nature. Just having a quick look through the other ones, we can see Sand coming down to base, actually a little bit weak in Mana, a little bit weak in Gala, but just forming a base. Engine is starting to break below, but there's a lot of support at this 1339 level. We can see Ape not doing too badly, but retracing. A lot of support around the $11 mark. Chili's is retracing, but there's quite a lot of support where it is. If not, if it drops down around the 2075 mark, will be quite good. And we can see SLP is dropping down, but there's a wide range of support here. Typically, this is pretty interesting pattern for traders in crypto. I had a couple of really interesting comments, direct messages to me. One was, when do I apply log? If you're looking at exponential price action over any period of time, you must turn it to log. It's a must. It's not an option. You must turn it to log. If you don't, you're looking at this like a stock market chart. And stock market charting in crypto will lead you dramatically astray. You can already see the massive difference between log and not log. Log and not log. There's an enormous difference between them. And this is something to bear in mind. When you're coming up to shorter time periods, you don't need to use log. There's many reasons that you won't use log as well. You always want to get the maximum impact out of price action. Try to understand its volatility. But if you go for a long range view, you must use log. It's exponential. I'd love to hear your comments about how emotion can influence your profitability inside the crypto market. What is your feeling about Rule 570? Psychology sets profitability. I'd love to hear from you. And where do you think Bitcoin is headed to? Do you think it's going to stay in A, come down to B, go up to C or D, or even E? Again, I'd love to hear from you. I hope you found the content useful. Please consider sharing and liking this video, and also subscribing to the channel. We'd love to have you as part of our global KS family. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students, and of course a very big thank you to you for watching and being part of our global family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the tax software I use, and if you're interested in the masterclass, there's references and content and 80% off if you contact the ambassadors. Please click the links in the description of this video if you're interested in that. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe, my friends. Take care, and see you next time. Bye for now.